So just a few weeks ago, we did a video where we called local coin shops in random places around the US and we asked them this question: why is the price of silver going down while inflation continues to go up? If it's supposed to be a hedge against inflation, shouldn't silver be going up right now? Of course, we know that it's not. In fact, silver price keeps continuing to look weak and even dropping. But we had one guy on the phone, his name was Daniel from Daniel Bullion Coins in Virginia. And what we're going to do today is get him back on the phone because a lot of you requested to hear from him again. He was very informative and had a lot to say, and you guys wanted to hear more. So thank you for all those comments. Let's get on the phone with Daniel and see what we can get out of him today. Okay, so we're going to get Daniel on the phone here and get some great insight from him. But as always, don't forget that none of this is financial advice, so don't take it that way. Always do your own research. And additionally, if you're new here, do me a favor and don't forget to subscribe. It really helps me out, and I greatly appreciate it. All right, let's get Daniel on the phone. All right, guys, so we have Daniel back on the phone from Daniel's Bullion Coins. How are you doing today, Daniel?
I'm doing really good. I appreciate you getting back in contact with me. This will be fun to answer some questions, and I always look forward to helping people out.
And I tell you, honestly, I didn't write anything down. I didn't prep for this. I just figured we would talk because you had so much to say last time. And last time we did this video, so you guys know, Daniel did not know I was talking to him. It was just a random phone call with someone asking questions. And then, of course, we did it with his voice changed. And my voice was changed when he heard me. So he, just in case he watched my channel before that, he probably wouldn't have recognized me. But we're definitely happy to have you back on, Daniel. You had talked a little bit about what's called the milkshake theory. Do you want to go a little bit more into that?
Sure. At first, I didn't believe that it would play out like this, but it seems like it is. The milkshake theory is that the dollar is going to get stronger as it goes down. It's going to get stronger. So you can look at the dollar index, the DXY, and you can see that it's going up. But that is in comparison to other currencies going down. And in our first conversation, if people saw that video, I listed off some of the currencies that we are comparing it to in the dollar index. And I said the ruble, but I misspoke. It's the rupee, the Sri Lanka currency. So the Russian ruble, I believe, is the opposite. I believe that their currency is going to stand up taller and better as a commodity because they're holding so much wheat and natural gas and oil for Europe. So I misspoke on the other video. I meant to say rupee, like a Sri Lanka. You look at Sri Lanka and East Asia area, that and other currencies are rapidly going down. And in those currencies, if you try to buy gold, you can see that the gold is highly numerated in their currencies that are descending, which makes the dollar strong, which makes sense. We are in a loosely way tied to oil. Commodities like gold and silver go down with the dollar.
That makes sense. So as the dollar's getting stronger, silver looks weaker, is what you're saying?
Exactly, and that's just a temporary thing because, as everybody knows, we came off of the way I say it, and I know this is different from everybody else, but this is just the way I look at it. We came off of the gold standard in 1933 when FDR made it illegal to have gold in possession for U.S. citizens. And we came off of, the way I look at it, the silver standard with Nixon in 1971. And the reason that we were doing that is we doubled the amount of money that the Fed, the Treasury, had when we came off of the gold standard in 33. And that created, let's see if I can think of the name of it now, it's top of my head, the Exchange Stabilization Fund. And that's the money that they use to manipulate the market nowadays. So, but as we went along, unhooked and unhooking from gold and silver the last 100 years, we've created money to do things like the New Deal, to fight wars. We just print that money. We just create that money. and gold and silver get further and further detached. And the exchange stabilization fund is used to manipulate the market to do what it wants to do. And so we come on up to modern day, and we have these tragedies like Katrina, 9/11, different wars that we've fought, and social programs that we ramp up over time, and the dollar gets printed in excess to where we just have so many dollars floating around, and that's inflation. Inflation is not that the food is going up, but that we have so many dollars floating around. And what was your question again? I kind of lost track. I tend to go down rabbit trails, and you have to reel me back in and
No, totally.
Going again.
To be honest with you, totally okay. No. I just said that so as the dollar gets stronger, silver looks weaker, and then that's where you had started down your rabbit trail.
Okay.
But it's a very interesting. Yeah, go ahead.
Yeah. So the dollar's getting stronger, and it's nominally. So you see the stock market going up, you see assets going up because the dollar is getting stronger. But in reality, it's actually weaker. It's actually the buying power or the strength of it is weaker. And I think we talked about this in our first video, where the 64 quarter, the 1964 silver quarter, would buy you a gallon of gas, it'd buy you a pack of cigarettes, it'd buy you bread, milk, whatever. Well, today, it will still buy you a gallon of gas, a pack of cigarettes, or whatever. You just have to convert it into a depreciating dollar, which is higher nominally.
Right.
It's $5, but it's actually depreciated. But that silver quarter will still buy you, it's still equal to that gallon of milk. It's still equal to bread, gas, cigarettes, whatever.
Yeah, I did a video like 6 to 8 months ago, I believe, where I showed the value of the silver over time, and I compared it to different commodities, to food, gasoline, even housing prices, and showed that it was really strong. That being said, and I'll run this by you, I did a video just the other day talking about how, at least with melt value, now I always get railed in comments when people don't get 100% where I'm going with something, and maybe I'm not super clear. But like the value, like the melt value, not including the premium that you have to pay on like 90% today, if the silver quarter no longer melts for the average gallon of gas in the U.S. Now, granted, with the premium that you have to pay to get a silver quarter, or even if you were to sell it, definitely does. But just the raw melt value doesn't seem to be there anymore. Why do you think that is?
Well, that's the paper price going down, the melt value
Right.
of the paper price going down. But the actual tangible, because I own a shop, I can tell you that my wholesale supplier is having a very difficult time getting silver. Everything is right now like 4 to 6 weeks out. And so we're seeing it unhook. And I could go in a million directions with this one. But when I'm trying to get back to where your question was,
That's okay. Keep going.
If I go down a rabbit trail, just forgive me. I just go crazy sometimes. But so the silver is unhooking from the spot price, and so your premium price. So that's why I am a very big proponent of having a silver coin in your possession. 2 reasons I'm going to tell you mainly. One is that you've got 2 birds with 1 stone, essentially. Instead of just silver value going up, you've got the coin value going up. And the reason that those two, you want to be invested and diversified into both of those. This is not financial advice. This is just me telling you what I'm doing.
Right.
Those 2 things are going to increase in value, the silver and the fact that it's a coin. Now, let me tell you a little backstory. I didn't know anything about silver and gold 10, 15 years ago. I was in the construction business 35 years, and it started to crash, and I started to look at things economically, and that's when I realized I started to educate myself on the gold and silver thing. And one of the things I did to educate myself was I took some bars and some rounds and some 90% and whatnot, and I went out to the farmers markets, and I asked them, what will you take for food, ammo, tractor parts? I want to hire someone to do some work on my farm. What will you take? They all took 90% silver. They all took 90% silver. And so when people come to me and they say, I want a bar, I want a round, I discourage them from that because you're missing out on the two birds with one stone, the diversification. You're missing out on the fact that this is a currency crisis that we're going into, and you're going to need currency. And the 90% provides you incremental fungibility, and it's recognized. It's got authenticity. And so that's where I try to lean people to from my experience. And also, a side note, the skill. You need the skill and the connections to go out to the farmer's market and purchase that food. Start supporting your local farmer, and make those connections, because as this falls apart, if you are on a first name basis and you're trading already and you already have that skill to trade 10 dimes or 4 quarters or 2 halves for a basket of fruit or some ammo, you can calculate that in your head and you can swap with somebody and you know where he's at and you're on a first name basis. You're going to have that skill and that contact that you're going to need for whatever the future holds.
Right. Now, do you believe, when you said that you try and encourage people to get 90%, do you believe that they shouldn't be buying pure bullion as well? Should there be like should you diversify, if you will?
I definitely believe in diversification, but pure bullion is the last thing I would be stacking. If you're going to start stacking 100-ounce or 1,000-ounce bars, I would say get into gold then and be diversified into gold. There are advantages with the bullion. There for a while, there were no bars available, and the premium on the bars went up higher or close to the 90%. We just couldn't get it.
Right.
So for a fluke moment there, because I think people are uneducated, they are uninformed, they gravitate naturally to the 3 nines and the 4 nines bars and rounds. But if they go out and they experiment and practice on their own purchasing food now, they will find that it's dimes, quarters, halves, Morgans, peace dollars. That's what will get you the food. And because of authenticity, you can make change. It's fungible, it's incremental. So in other words, incremental, I can take 1 dime and I can get a loaf of bread on Monday. I can get a little gasoline on Tuesday, and I can break it down. And if the guy says, okay, I want 10 dimes for this basket of fruit, you can say, how about 8 dimes? And he says, well, 9. Okay, you've kept 1 dime back. And you've negotiated down because you have that incremental advantage. And then it's fungible, that it's currency.
That makes sense. It'd be harder to do that with 1 ounce and 2 ounce, I would imagine. Yeah. So.
Well, that's where we came up with the pieces of 8. Back in the 1700s and early 1800s, we had the Spanish reals and the pillar dollars. And so they would cut it into 8 pieces because they needed that incremental fungible capability. And that's where we get 2 bits for a haircut and that kind of thing you hear on Westerns.
Right. So let me ask you this. What do you think happens? Like, when does it all come to a head? Like, if our dollar crashes, what happens next?
Well, the dollar will crash. It's a mathematical certainty, a historic certainty, a political certainty, a scientifically a certainty, and biblically, I believe it's a certainty that the dollar will collapse. So we need to be preparing now. And I don't want people to buy silver and gold to try to get rich. I believe silver and gold are going to triple digits. Silver. So let's say silver is going to triple digits, but the food is going to go to triple digits. You're not going to get rich off of silver. You're going to have a seat at the table to be able to eat if you have silver.
Ah, that makes sense. So, yeah, and I talk about that on my channel quite a bit about how, I don't stack to get rich. I stack to protect and preserve, what I do have and my ability, my purchasing power, if you will. So, yeah, if like you said, if food goes to triple digits and you don't have silver and you just have the dollars that you put under your mattress, that's not going to do anything for you at all, is it?
It's not going to do a thing for you. Look at what happened to thousands of examples through history. We have the Civil War, where the South started out, with $1 and $5 bills in 1861, and by the time they got to 1864, they were printing hundreds and 500s, and they were cutting them with scissors, and they were cutting them so fast they looked like the kid cut them,
Right.
because they were just cranking them out so fast. Look at Weimar Republic, where it was blowing down the street, or they were burning it to keep warm. The paper only has BTU value, and that's the rate that it burns at to keep you warm. It doesn't have the intrinsic value, the scientific properties that silver and gold do. Silver and gold, they don't rot, they don't decay. It stays in the form that you've put it in pretty much forever. And I'll go down a rabbit trail again and say that's why the secret to silver and gold is that it stores your time, your energy, and your effort. So if one guy goes out here and digs silver out of the ground, and another guy goes out here and pans gold on the side of the river, and another person raises wheat and grinds it for bread, and another one has a cow and milks it, they all come into town at the end of the week, and they trade an equal amount of energy for an equal amount of energy. Okay, it took me a week to dig this silver. It took me a week to pan this much gold, and the cow and the wheat, and these people trade equally because of their time, and their effort is stored in that product. But the wheat doesn't store, and the milk doesn't store, but the silver and the gold store for thousands of years, your energy and your time.
Yeah, makes sense completely. So let me ask you one more question, and we'll wrap this up for today, but we'll probably get you back on again.
Look forward to it.
What do you think people should do right now to protect themselves against what you believe is coming?
Buy food. Here I am, a silver and gold guy, and you're going to ask me what to do, and I'm going to tell you to go buy food, so isn't that crazy? But really, if I had to say the number one thing right now to do is to get the skill and the ability and the contacts to be able to go out and trade with a farmer, your local farmer at the farmer's market, or whatever you have to do to start establishing that skill. Because you don't, when something, if a crisis comes in, we're talking about having silver and gold as an insurance for a crisis. It's not, I'm not saying tomorrow the world's going to end. I'm just saying this is insurance. You have insurance on your car for wrecking it. You have insurance on your house. You may never need that, but you will need silver and gold, I believe, in our lifetime to purchase food with. So the point I'm making is, I'll back up here, is the silver. Oh boy, I lost my thought again. Where were we?
You were talking.
I get off on a tangent and I go crazy, don't I?
That's okay. You were talking about creating a relationship with your local farmer.
Yes.
Yeah.
Contact. Yes, the skill and the contact. The number one thing I would do, I would tell people when they come into my shop, I tell them, don't spend all your money right here. Get out there, find somebody that you can buy eggs from, buy milk from, and learn to be able to convert a silver dime, a quarter into food in your head and negotiate with people. That's the number one thing I try to get people to do. Have fun with it. Go out, take your wife, the kids out, and go out and have fun, learn how to do it.
Right. Awesome. Well, Daniel, I think we'll wrap it up here. It's been a long one, but I think I have so much more to ask you, so I think we'll do that in subsequent videos. Guys, if you want to contact Daniel, I'm going to put his information in the description below. Please do me a favor, only contact him with legitimate questions. Obviously, he's a busy guy. But Daniel, thank you so much. I'll have all that information down below. And did you have anything else you wanted to say before we go?
I appreciate the opportunity. Thank you so much for giving me a call, and feel free to have me back anytime. I'll be happy to do it.
Awesome. Thank you, Daniel. It's been a pleasure.
Thanks, buddy. Bye.
Okay, everybody, that was Daniel from Daniel's Bullion Coins. I hope you enjoyed the interview. It was great, and we will have him on again sometime in the near future, so keep tuned for that. Don't forget to subscribe. One thing I will say is that it's a pleasure to be able to do what I do, because I talk to a lot of different people from around the U.S., and I get a lot of insight, and sometimes on random calls, just like it was in that video a few weeks ago, we walk into a gem like Daniel. He was a fantastic person to talk to. We talked a little bit before the call as well, and I can't wait to talk to him again and share even more insight from Daniel on this channel. All right, guys, thank you so much for watching. Again, I hope you enjoyed it. Don't forget to subscribe, and we'll see you next time.